Hello traders, good afternoon. Welcome back to the channel. This is Vishal and you're watching Weekly Sectoral Analysis. Now this week's video is going to be extremely important, and the main reason for that is suddenly we have a negative pattern which has been built in the weekly time frame chart of Nifty Spot, and this is a dark cloud cover pattern. And this dark cloud cover pattern has come up at a resistance zone which is the all-time high. All right. So what does this mean? First thing is, let's have a look at the monthly time frame charts. Monthly time frame charts are looking pretty okay. The trend is up. No negative sign over here. Even if I convert this chart to a regular chart, if we go to the weekly time frame chart, we can see a dark cloud cover pattern. RSI has not tested 70, but it is clearly visible that the prices are slightly overstretched near a resistance, and some sort of profit booking or a consolidation or a sideways move would be nice, because we need to understand that every move in the index cannot happen always up, up and up. We will have an up move, we will have a consolidation, maybe a dip, and then we'll have the next move on the upside. So probably this is a time to slow down, and the next week's move, whatever it happens over here, the next week candle is going to be very, very important, because just a change in the trend by just one single candle is not sufficient. The next week's candle is going to be very, very important. Now, considering the daily time frame charts, we have something more to watch on. First, I'll convert this candlestick chart to a line chart. What we can see over here is a clear negative divergence. We have a higher high in price, lower high in RSI. So this is a clear sign that yes, markets are tired to go higher, and they have also cracked one of the supports, and this is the daily time frame chart. So in the daily time frame chart, 18,690, 18,700 was a decent support which has been cracked on the downside with pretty decent candle. Now if I check the hourly time frame chart, you can see that this particular support in the daily time frame chart has been broken, but there is a small gap over here. So at times, watching shorter time frames is very, very important. So now what is visible is we need to close below, or at least trade below 18,600, because what will happen is we have broken this support, but we are also trading above this support. So at times what happens is prices do correct. They fool all of us that the support has been cracked and will go lower, and then they will bounce back, and we'll keep thinking that why did this happen. So a close, or at least a convincing trading below 18,600 will result into lower levels, and those lower levels could be around 18,570, and once this is broken, possibly we can drag towards 18,500 or something like that. Okay. Now let's have a look at the Bank Nifty chart. Bank Nifty chart, in the weekly time frame chart, I think things are pretty clear that the trend is up and we are into a consolidation mode. And if I check the daily time frame chart, things are even more clearly visible that the prices are going nowhere. If you check this zone, and especially this zone, prices are just going up and down, up and down, up and down. So overall, the trend is surely up in the weekly time frame charts, but in the daily time frame charts, prices are completely haywire. And we need to understand that why prices are doing so. First thing is that they are facing resistance from this all-time high over here, and they are not able to close above it in a weekly time frame. If you check, they have traded above it, but by the time the week ends, prices do retrace and come down. Now in the daily time frame charts, we need to understand that this particular support is a pretty good support, which is 43,340, and there is one more support at 43,130. So if this is broken convincingly, then we could move towards 43,100 or 43,130 in the Bank Nifty spot. PSU banking chart. PSU banking charts have been very, very surprising, because what has happened is private banks had performed, but PSU banks, once they showed us the one up leg in 2022 end, and then they retraced, and then they started going up. Over here, there was a fair bit of optimism that there is a possibility that the PSU banking stocks will keep going higher, but somehow they have not been able to perform, and the last 2 days price action was very, very surprising. Yes, currently they are at a support juncture, but we can clearly see that the trend is up in the weekly time frame chart, but the trend is down in the daily time frame chart. So generally, when both of the time frames, the daily and the weekly, both are completely opposite to each other, it is important that we stay away, take some time off, and try to understand what the sector is trying to do. Do not jump into any PSU banking stocks blindly. If you're holding any stock, then yes, you can hold that with a trailing stop loss. If you get stopped out, just exit the trade and get out. Private banking pack. Private banking pack is currently consolidating in the weekly time frame chart. The trend is surely up. The biasness is up, but you can check few of the candles in the last few weeks has been, all of them are with a smaller real body. Couple of hanging mans, couple of dojis, one spinning top, and again one, you can say, a bigger spinning top. So it is very much visible that there is some sort of question mark in the market's mind that it doesn't know where it wants to go. Plus, it is also facing resistance from this particular high over here. Immediate support in bank Nifty in a private banking pack is somewhere around 21,946. As of now, in the daily time frame chart also, it is clearly visible that they are sideways and consolidating. Only one positive thing which I can see over here is that the leader of the private banking pack, recently HDFC Bank, tried to suddenly shoot higher. Yes, these are the negative candles. I can completely understand, but we cannot say no that the private banking stock, the king of the private banking stock, HDFC Bank, has been able to bounce back. After the bounce back, what happens is very important, because sometimes, what happens is prices just bounce back and then the rally fizzles out and they again go back into the consolidation mode. If that happens, it makes no sense. But if the bounce back sustains, it consolidates and then again makes a new high, prices go above this particular high, then yes, we are in possibly some sort of revival in the private banking space. As this is the leader, then we'll have to see which other stocks are trying to follow HDFC Bank. CNX Energy. CNX Energy, we can clearly see in the daily time frame chart that the trend is flat, and even in the weekly time frame chart, the trend is completely flat. Neither it is up, neither it is down. So we will only concentrate on the daily time frame chart. Prices have rallied pretty recently, and you can see prices are facing stiff resistance from this particular resistance band. And if you check the candles and RSI, we have a negative divergence over here. Prices have retraced. They are back at a support zone. Now, what happens exactly over here? We need to wait and watch and then take some action. Just because price is at some sort of support doesn't mean that it is going to bounce back, because supports are and resistance, they are always temporary in nature. They are not permanent. So if the support cracks, then things will change. If it doesn't crack, if prices start to move up, things will be different. So we need to wait and watch. Maybe in next 1 or 2 weeks, we'll understand. And one of the stocks to keep watch on will be the king of energy pack, which is Reliance Industries. All right. Metal pack. Now, metal pack, what has happened over here is, as I've been repeating, that this is the first swing, second, third swing, fourth swing, and the bigger one is the fifth swing over here. Now, what happened over here in the daily time frame chart is very, very important. Prices did face resistance from this particular high over here, this high, and this low. And even this low, as this particular candle wick is pretty big in terms of its size. So now they have come down. They will try to find support somewhere over here in this zone. As of now, I have no interest take any trades in the metal pack because the trend is completely flat. You can see that the prices are trading between the dual moving averages. So for me, it makes no sense. Neither it is bullish, neither bearish. But yes, they are trying to come near a support zone. Now, if the entire sector tries to revive itself, and among the stocks, Tata Steel, Hindalco, all of these stocks are the major leaders over here. If these stocks start to participate on the upside, then possibly I'll be interested in this sector. As of now, it's a complete wait and watch game. Autopack. Autopack, we need to first look at the weekly time frame chart. We can see that the stock has extended this swing on the upside, and it is certainly overstretched and facing some sort of resistance from this Fibonacci extension. We also have a negative candle this week. So this is a clear sign that Autopack stocks are very, very overstretched. One stock which I did show interest was Hero Moto, but it was unable to give any sort of breakout in the smaller time frame charts. It went up, but again it collapsed. So as of now, I'm not interested. I'll be waiting patiently for anything interesting to happen in the stock. Second stock again is a little bit interesting is Eicher Motors, as it is certainly trading at a support. But again, I'm a trader who goes with the top-down approach. So if the entire sector is trying to participate, the entire sector is trying to revive itself, and maybe in few of the stocks, like if I look at the Autopack, there are a fair bit of stocks in my list over here. So out of these stocks, at least 3 to 4 stocks try to show its revival signs. Then maybe I will be interested in the stock, but otherwise I'll stay put. I'll sit at the sidelines and I will wait for the entire sector to get revived. Next is IT Pack. IT Pack is at a support. It's looking interesting in the daily time frame charts. In the weekly time frame charts, it's not great. Few stocks which I've shared with all of you have performed decently well as a swing trader, like HCL Tech, or you can say Tech Mahindra. These stocks have started performing, not too great, but yes, they're still performing. One stock didn't go well, and that was Persistent Systems. Like what happened was that it did bounce from the support, but was unable to clear its resistance. So as of now, I am not interested in this stock. Overall, the sector is okay, but as I said, that if you blindly just pick any stock which is not in momentum, not in a good uptrend, you won't make money. Like you can say Infosys, the leader of the IT pack, but it's not performing right now. But if you check the charts of Tech Mahindra or the one which I shared recently, which was HCL Tech, if you would have participated in that stock, that particular stock, you would have made some money. Finance pack. Finance pack is in an uptrend, consolidating, but few of the stocks in the finance pack are showing few other signs. Like if you check, like this stock is not performing much. Chola Finance has been extremely overstretched. If you check again IAFL, it has come down to a support. You should keep a watch on that. IDFC currently extremely overstretched in the weekly time frame charts. Now it is retracing. Swing traders should keep a watch on these stocks. Manappuram Finance, I guess it needs a lot more consolidation. And HDFC Life, again, this particular stock, we can see it is showing a inverted hammer in the weekly time frame charts. And even in the daily time frame charts, things are not great. It's a little bit overstretched. Probably consolidation will be a good sign over here for this stock. After the consolidation is over, one can look at this particular stock. PFC, again, a very good trend on the upside, extremely overstretched in the weekly time frame charts, inverted hammer. Stock should consolidate or correct, and then only I will be looking at this particular stock. SBI Cards, yes, strong in weekly time frame charts, not so great in the daily time frame charts. Probably the way it has corrected, I don't like, but if it consolidates and shows sign of revival, then I'll start looking at the stock. So Finance pack is one sector I should say is probably a little bit different in comparison to the entire market right now. But again, you will have to be very, very pinpointed to the stock and also see that the entire sector is getting revived at the same time, because there are too many stocks in finance. So you'll have to be very, very choosy in that particular sector. FMCG, clear signs of, you can say, negative divergence in RSI and prices making higher high. Same thing, negative divergence in price. So I'll stay away from this particular sector as of now and stay put. Let the sector correct, let it consolidate, and then only I'll be interested. Consumption pack, again, negative divergence in the price. In the daily time frame charts, you can say higher high and lower high in RSI. Extremely overstretched in the weekly time frame charts. RSI also at 70, which is now trying to come down. Same thing, I'll try to completely avoid this sector and wait for a better risk reward ratio to go long in these sectors and stocks. Infra pack. Infra pack, again, it is slightly overbought over here. And you can say a little bit negative divergence over here. But if you check all of the cement sector stocks in the infra pack, I'll just go down to the infra pack. If you check the cement stocks, all these cement stocks have corrected, and probably not all of them, but few of them. They're trying to come near to the support zone, like Ultratech Cement is trying to come near its support zone. As of now, it's not certainly not interesting. Once it comes down, it will consolidate and it will take few days, and only then the stocks will start looking interesting. So yes, we should keep a watch on these stocks, but do not jump onto these stocks immediately. You'll have to wait pretty long time, and then only you will see some sort of interesting moves coming. You can see Tata Power also negative divergence, pretty recent uptrend, and now it needs to consolidate. Although there was one stock which I shared on my Twitter handle, and that was Bharti Airtel, one of the components of the infra pack. It had given a breakout in the hourly time frame charts and a breakout in the RSI trendline breakout. So that is the reason I had a positive view and I had shared on my Twitter handle. And currently it is in a short-term uptrend. All right, let's go to the next sector. Next sector is pharma, looking better than other sectors right now. Only one stock I will talk about is Sun Pharma. Not interested in any other stocks as of now. The stock is consolidating. It has tried to give a breakout. It failed, but it is still in a consolidation mode. Probably it needs even more consolidation. So yes, it can probably try to give one more breakout. With a pinch of salt, I would like to participate in that. If it gets stopped out, I'll exit. If the trend continues, I'll try to follow the trend with a trailing stop loss. But other than this stock, I am not interested in any other stock right now. Realty pack, pretty much overstretched and negative divergence is clearly visible in price. Certainly not interested to participate in the sector as of now. I will try to stay away, and maybe when risk reward ratio improves, I'll try to get in that particular stock and sectors. PSE sector has recently performed very nicely. You can say the way it has gone up, and you can see very clearly prices are away from moving averages. RSI was above 70 and now trying to come down. So again, even this particular sector is slightly overbought, needs to correct, needs to consolidate, and waiting for a better risk reward ratio makes more sense. Mid-cap index. Mid-cap index, we can clearly see it's facing resistance from this 161.80% Fibonacci extension, RSI above 70. And the way it has gone up, I guess it's pretty overstretched. It'll take few days for the sector to cool off, maybe few weeks. So I will try to stay away from mid-cap stocks. Now, summing it up all, the entire market is slightly overheated right now. Apart from finance, private banks, and you can say metal pack, not right now, maybe later on. When the time approaches, I'll share my view. So not a very good time to aggressively trade and participate in the market. Be very choosy. First of all, trade less. Be very, very choosy. and participate only when the risk reward ratio is higher in that stock. The why I'm saying this is at such times when making money in the market is not easy, if you participate in a stock where risk reward ratio is higher, even in a worst case scenario, a few of your stocks get triggered, but a few of the stocks which have performed very nicely, they will be able to cover the small losses which you will be doing in the negative trades. All right. So I hope this video has helped you to bring more clarity about the market movement for the next week. I'll keep sharing in my short form videos in Nifty and Bank Nifty view in the weekdays. Trade well, stay safe guys. Thank you.